Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant here. I'm the host of the Smart Property Investment Show. You're tuning in on the Property Investment Podcast Network and also all over the internet, YouTube, wherever you choose to watch your videos. Welcome. Thanks for tuning in to the Smart Property Investment Show. I enjoy doing this, and as I hear that prelim jingle coming in, I sit there and just go, wow, I've done this quite a few times now, and I wonder where this will go. So every single podcast is new and unique. And if you can see me on the video, if you're watching it right now, I have what is largely what was a blank sheet of paper, and I've scribbled just a couple of notes on it. So the idea of this particular podcast is to be quite authentic and fluid. I know what I want to get out of it, and I'm pretty clear about how I can navigate and shape the conversation to best support you, the property investor. But largely, I just don't know where it's going to go, and that makes it exciting and unique. And I do enjoy this podcast and navigating this crazy world that is finance. And recording this, I hate the timestamp podcast because this is going to be something for time. But it's a Tuesday. And the Reserve Bank of Australia meets in about, they're probably in a meeting right now or finishing it up, and then some smart people are going to get on their typewriters and type it up. In about 2 hours' time, we're about to get interest rate announcement. Probably one of the most hotly contested ones so far. Everyone thought the last one was a shock and wasn't going to happen, but there is good talk now, based on a whole bunch of data that's come out over the last couple of weeks, that there may be another interest rate hike, and it might not be the end of it. So we don't know. You're going to be tuning to this after that has happened, and therefore I'm not going to give you my sense on what I think is going to happen, where I sort of do have an inkling about how it will play out. But that's the environment we're in right now. More than ever before, you need to make sure you're surrounding yourself with the right people as you invest in property. And I'd just like to quickly shout out all those people who keep those reviews coming on the podcast platforms. I get a real kick out of it. We're going to do a bit of a Q&A on some of that stuff and share some of that commentary, but please keep them coming in. The team get a real kick out of it. They are very useful and beneficial for us. We shape the way in which we approach these podcasts based on that feedback that does come in. So keep it coming. We do read it. We do listen to it. We try and shape and evolve the podcast with that in mind. But a lot of the feedback we do get is to try and understand what makes the professionals tick that operate inside of property investment. It's funny because often I think that what most people want, most listeners want or viewers want, if you're tuning into this on the video, is investor stories. And that is the case, but most people are so hungry for information to help shape their decision-making in who they use as a property investor and what they do as a result of it. And you would have seen we did the Big Fast 50 report recently, hugely popular. Thousands of people have downloaded it. It just goes to show how many people are trying to pave their own way in property investment and make those decisions. So we're going to do more conversations with the people who are connected in supporting Australian property investors. And one of them joins me in the studio today live, Arjun Paliwal, who founded and is the managing director or CEO, probably both. I'm not exactly sure which title he uses, of InvestorKit. InvestorKit was the Buyers Agency of the Year at the 2023 Real Estate Business Award, the REB Awards, which is the big awards program for real estate. It's universal. It doesn't matter where you are in Australia, whether or not you're part of an industry association, whether or not you're part of a franchise network or an independent. It's the universal accolades for success in real estate. And this guy's business, which has grown rapidly, won Buyers Agency of the Year. And I know he was pretty chuffed about that. So I'm going to get behind the man, behind the business, work out how it makes it tick and whether or not what they do is resonates with you. Arjun, how you going, mate? You well?
I'm very well, and it's good to be back in the studio, actually.
It is good. It's weird looking over through, and I can't really move this because I'll get in trouble because it'll change the video and stuff. But, mate, it's good to see you in person.
Thank you, mate. Likewise.
And I did see you on the evening of the Real Estate Business Awards, the REB Awards. You were sitting there with your team. You had a full table. Did you have 2 tables?
We had 2 tables. And definitely was a special moment, just that alone, to reflect on how we were sharing the table with a few others, and now to be able to celebrate the win with 2 tables was pretty special. You
had some mortgage brokers on your table as well, by memory, didn't you?
We had one.
Yeah.
We had one there.
Yeah, that's cool. So partners as well as team members all coming together. And it goes back to this notion of property investment is a team sport.
It is.
Absolutely a team sport.
It is. I mean, I just think of both my own investing journey personally and what our clients want to do, as well as what we do as a team. And that word team rings in all three scenarios, whether it's myself, whether it's what my clients do, or it's whether what we do as a business.
Yeah, and it's a business which is thriving. How long have you been going? What date did you incorporate? You must know.
Oh, I think it was July 23, July 23rd, 2018.
July.
And so
okay.
I think that was the year where we actually officially showed to the world. But I think the corporations, all that sort of stuff, going back to May now of 2018.
Okay, 2018. So essentially it's 5 years.
5 years, gone just like that.
It's gone fast, 5 years?
It has, because funnily enough, I remember I've only been in Australia since 2010.
Yeah.
And so you could say close to half of that time has been at InvestorKit and the other half at CBA. So the old banker transitioning to what we do now, and 5 years have gone very fast.
And the first time I spoke to you, you were still working at the Commonwealth Bank as a property investor by memory, weren't you?
That's right.
You're a branch manager.
Managing.
Hang on a sec. Let me get to see whether or not I listen or not, right?
Look, I won't blame you. It's 5 years.
No. Sylvania, Rockdale, somewhere out there.
Close, inner west. So Marrickville, Surrey Hills, Newtown.
Close. Yeah, bank branches don't exist anymore, mate. You got out at the right time. Good luck trying to find one that's open.
Oh, look, it was definitely a special time when doing it, because that's where the curiosity all started, really. Like all the lending you see, the deposits in, the deposits out, the business owners, the personal accounts.
Yeah.
A lot of stuff going on. Curiosity's your friend there.
How many people redline in their personal finances, you reckon? Most?
Look, I think people typically come to the branch when they really need help, or there's a big issue. And so you do see a little bit more of both sides. I really want help with this mortgage and it's great in terms of succeeding in building investments or buying a home. But then you also see a lot of the other side, which is I need help because my accounts aren't right or something's not quite good. So you do see a bit more in my world in the branch, because I was just more when people needed that support. Yeah,
and people do need help and assistance, and you know, guys like me and you who knock around finance, it just becomes second nature, right? You bandy around terms and concepts and strategies and theories and stuff, and two property people talking to each other, the conversation moves pretty quickly. But for most people, property is still quite a mystery. And good thing with property and property investment is such a creator and originator and keeper of wealth in Australia. And when you think about all the seismic shifts and challenges going on with the world, whether it's the share market, whether it's the rise of AI, whether it's anything at all, digital connectivity, it's pretty safe property. Get your money out of the digital system. It's pretty hard to hack a property once you've got it in there. It's a good, safe investment for Australians. Hence the reason why we're seeing property investors in every generation looking to grow and create and shape their financial future through leveraging property. So you went, so back to InvestorKit, so sort of May to July 2018 is when it really started going.
Yeah.
You left straight from the bank into InvestorKit. Was there a gap in the middle there? What happened in the gap?
Very unique period. So in 2018, it was a moment in which, actually even the year before that, 2017, November, December was the moment I looked in the mirror, looked to my wife and made a decision that I wanted to do something. I had no clue though. I had no clue when, what, how.
So you had a safe little gig as a bank manager and probably a trajectory you could move up through the ranks and get a job in corporate, right? That would have been the typical. You could be the CEO of a CBA right now.
Well, fun fact, two things. So I did have that step into corporates just after branch managing, and that was a good year and a bit. Went out, did my masters, came back in, and all that sort of stuff. And even a funnier fact is at 19, it was maybe age 19, I was a bank teller or bank specialist. It was one of my earlier roles in the bank. And someone asked me what was my big BHAG, the big, hairy, audacious goal. And I said, one day I'd love to be a CEO of CBA. And so funny you say that, was actually my old 19-year-old self going high energy, jumping off, saying anything and everything's possible. But how that comes full circle in terms of that move, and particularly 2017, was Lee and I, my wife, were saying, hey, I really want to do something. I don't know what it is. And if I go back to the actual moment that made me think that, it's this weird feeling when you look in the mirror each morning, you're off to work, and you know where you're headed. And for some reason, clarity and execution and pathways for people was a great thing. But for me, it was the opposite, to know too much about where I was heading. There wasn't that extra layer of excitement.
So you didn't like what the future looked like? I
liked it, and it was too comfortable.
Yeah, it's a well-worn path.
Yeah. Very warm.
It's a well-worn path.
Do your time, senior management, executive, do that. And it wasn't that CBA didn't have the right constructs as an organization. That's the perfect pathway. It's a dream pathway. But it's the fact that it was so predictable, so in front of you, and you'd had that path and everything was ticking boxes as you went on. I felt that I have this vision even today around whenever I'm making such large decisions, like leaving your job with no idea, no clue, is I have this belief of building your best possible worst case. And so I built a possible worst case where I was mapping this out and said, okay, I'm going to get my mortgages in order, have the right passive income stream flow through, which is a little and something coming through, which is nice. My wife's very supportive of the move, so she's still in employment. Then the next thing was I'll give my boss 8 weeks notice rather than the 4 because everyone just wants to do the standard 4. I'll be the nice guy and do more. And then from there, I had the age factor and I gave myself a time limit where in 4 years from age 25, 26 to 30, if it doesn't work out, I'll come back.
It's forgiving.
And so when I told myself, hey, what's your worst case? At 30, you come back to a double 6-figure income job and you come back with a good amount of connections in the bank. You've already purchased 9 properties up until that point. Your wife still loves you, you'd hope, and your dogs still love you. They're cool. Your dad's there, your family's there, and everyone will, have some people that will say, hey, this guy gave it a go, failed. But other people will go, you gave it a go, and good on you. And you have some war stories and battle stories and learning. So if that was my worst case, I was like, I'm up for that.
Yeah.
And that's what led me to leaving the job to figure out what I wanted to do. And it was about 3 months after leaving the job where I then figured out I wanted to do this.
Yeah. It's interesting, Arjun, how you got away. And that's probably an innate thing for you to do, whereas a lot of people, they go, wow, that is so bold and brash to actually go away and do that. But you've put the right risk. You've had, number one, you've had the right mindset and the right appetite towards risk, and then you've put the risk mitigation into it. So I wouldn't say that's a flippant decision. I think you've been very strategic about it. But what is the worst that can happen? What is the worst that can happen other than getting some scar tissue and getting new experiences? And it would have changed your perspective. Just by making that decision would have changed your perspective immediately. And without the headspace of sitting there probably for a couple of weeks or a couple of months trying to work out what you're going to do without the stress and trials and tribulations of a job, it probably put you on the right pathway. And it must be because, the business has thrived since then. Tell me about the first day of InvestorKit.
The first day.
What's the first thing you did?
The first thing I did was unpack my laptop, open it up, and I planned the 20, 30, 40 cool things I'm going to do. And they're all the things that any prospective business owner looking back today or anyone who wants to launch something or do something in the future should probably not do. What's my logo? What's my website? What's the brand this? What's that? And everything, the cool things that people and checklists and business toolkits tell you to do.
Yeah.
When really this should have been just sit there and figure out the best way I'm going to deliver value to someone, who I'm going to deliver it to, why me, what do I have to do? Like these sorts of things would have been far more powerful. I learned that in year 2 after trying my hand at everything and then failing at some things and then finally getting it right. And so that, what first day Arjun did is definitely not what someone should do. But what it was try and do a whole bunch of this could be cool, looks cool, kind of like the business card scene from American Psycho, and they're looking at the business card and like, oh, the shiny crisp, the edge, the writing that sticks out, all those things that don't really matter. I was doing that for the first 3 or 6 months.
And you know what? Everyone does it. And it's only through the benefit of hindsight you can be reflective and look back at that, right? 90% of winning is beginning. You got to start somewhere, right? And to actually sit there and come up with some super strategic business plan that puts value creation at the fore. You've just got to start doing something because you've got to get the cogs moving in order to advance and help you prioritize it. And logos. And I remember sitting there building early businesses and spending hours on whether or not this photo was the right photo or this, that, and the other. You get so absorbed and obsessed with stuff which, after many years of doing it, you just go, doesn't matter. It just doesn't matter. But you've got to do it, right? And that's the nature of experience. Where'd you come up with the name InvestorKit? What's the basis? Tell me about the origin of that.
Yeah, this is a bit of a flop in the making, but no, I think what happened here was I had this vision of being this crazy one-stop shop of everything, and in summary, the kit for investors.
Okay.
Right? Now, that makes logical sense in business plan version 1. I'm going to go do broking, homeowners, investors, data, tools, calculators. And then I very quickly learned that one person can't do it all. And you need a team, which is where definitely things are different today. But what I really realized that there was the idea of specialization, which was helping investors make quality data-driven decisions to start or scale portfolios. Like, this is the starting point. And as I started getting clearer, I had all these things disappear that I didn't any longer need to or want to do, because I felt like every time I did something more than that, I was taken away from the service quality I could deliver. And so then we just absolutely zoned down to delivering a buyer's agency service for investors who want to outperform. And so, yeah.
So that's your elevator pitch then. You know, the business is how to using data-driven insights to build or scale a property portfolio. That's pretty much what you do.
Yeah. I mean, I still have our vision in terms of to be the most trusted, data-driven buyer's agency for successful business owners and professionals looking to scale their portfolio.
So you talk about being data-driven, and I know you do the Property Nerds podcast, which is syndicated on the Property Investment Podcast Network, which you're tuning into this. And you haven't tuned into it, go and listen to it. It's probably not for everyone. It's about data. It's about being data-driven. I still think a lot of property investors just, go, oh yeah, I heard that this place is really good. I saw a fancy brochure. I'll do it. Those sort of people don't get value out of your podcast. But I think your podcast is in many ways, and probably it lends itself to the strategy of your business and how you go about doing it, is where you need to be putting your attention, because, you can't make decisions in property in isolation outside of understanding the data. Now, a lot of people will say, Arjun, as a data-driven buyer's agency, that data only tells part of the story. And you must get that question quite a lot. Data is only one part of this. What about the tactical identification of suburbs, assessing properties, negotiating? That's all not data driven, but it starts at the data, doesn't it?
Yeah, it's about having, firstly, the information that matters. I think with data, what many people don't recognize is that just imagine every part of your life and or business is filled with just information that matters. How crisp, clean, productive, efficient would it be? That's data in summary, the right information that matters. And then from there, you can go into a deeper journey. And I really, in Australia, I tried to say this as much as possible, and it was the macro, micro on the ground. And sometimes people believe data is just this macro economy, population, interest rates, finance trends, and it's all just this round table of smart things going around. Well, data is also how many shoes at the open home. Do you know what I mean? Because if there's a lot of shoes, there's a lot of people. Data is also how quickly something's selling on an individual house versus the same street, another house. Well, what's the reasons? And that's where you start creating checklists. And checklists around, hey, this main road, a bus stop right in front of the house, a school directly facing it. And so data is very much interpreted in different ways to different people. The thing where we feel we mastered it was taking it from the top level of economies down to the don't buy this house backing this highway or the cemetery in front or something else that's too close.
Yeah.
Because the data shows days on market takes longer, and when days on market takes longer, the sales agent's knocking on your door saying, Mr. and Mrs. Vendor, could I please adjust the price of this one because we need more interest? Well, that's data. Vendor discounting now takes higher. And then lastly, what does that plus that equal? Lower sale price.
Yeah. Interesting. And data, it's data equals intelligence, and intelligence is information that you can act upon. And that's exactly what you're talking about there. The more information you have, the more informed decisions you can make. And one of the biggest issues or challenges with property investment is that people can be absorbed or become obsessed with data, that it stifles decision making. Again, you've got to work out how do you interpret, how do you synthesize all of this information to have actionable, insights that you can move forward on. And I guess that's the skill set of a really good buyer's agent. They're able to use data-driven insights to shape and behave activity. And that's where you've excelled as a business. Yeah,
you touched on a really good part, the core word actionable. And what you just reminded me of then is I explained that worst case scenario earlier, and that was me about my journey in leaving work. I had a really good friend of mine who's also a client, and I said to him, hey, let me paint this worst case to you and you tell me where you say no. And he goes, sounds good. I said, it's in an approved market where the data shows signals that are likely for capital growth.
Yep.
The property then has a search conducted which has 21 points of due diligence that cancel out property that fails things that make them take longer to sell or sell for less. Then you get on the ground, have videos, have a review of its condition, know the look, feel, what the locals and everything say. And then you go further and you have comparable pricing and comparable rental analysis and a cash flow sheet. So you know how much to pay, how much you'll rent for, how much the numbers are. And then finally, you'll have legal clauses to protect you in a contract reviewed by a lawyer, have independent building and pest inspectors, have an independent bank value it, and then make sure that it goes through to settlement. And if anything pops up, you can back out and have your deposit refunded. And then I said to my friend, where does that go wrong? And he just said, it doesn't. So I said, that's your worst case. So like that's your worst case.
Yeah. And I guess you probably did the same approach to assessing buyer's agency as a place to build a career and build a business around, right? How did you assess with that data-driven mindset whether or not choosing to become a buyer's agent and building a buyer's agent business was something that will have longevity as a business case? Talk me through that.
For me, there was 3 reasons. The first one was pain. And so the pain happened because I had used a buyer's agent where the results weren't what I was expecting. And this is no means a dig in them personally, because it's also my shortcoming of analyzing and not analyzing certain things and being educated to a certain level. But the first thing was that shortcomings in that buyer's agency were very data-driven, meaning the shortcomings were around supply analysis, around cities' macro cycles. And as I then made decisions on my own that factored in these things, I realized there was a big gap in actual buyer's agency in Australia, not so much about supporting a service, delivering a quality service. There was no gap there. I left happy. It was interpreting data to make a decision where someone could look me in the eye and feel way more certain than anyone else could about something.
Okay.
And that was missing in my opinion. So that was the first thing from pain. The second thing was actually realizing that every year that went on in work, I was asked and needed to do more. I never said no to it, but every year it went on, I felt the world was changing. And we all, even now today with the AI revolution, will be asked to do more as the years go on, but it'll be very strategic. It'll be very tactful, quality. It'll be very something that the machine can't do. So what that made me realize is people's time is now, as time goes on, becoming more important than it's ever been in history. And so everything mattered. More people were eating out, or more people were talking about, going out to restaurants used to be a thing for the wealthy back in the day. And now it's the kid on pocket money at 16 has TikToks at some of the fanciest restaurants in Sydney. So the whole eating out is no longer a, luxury. It becomes a necessity. And so I just feel like time plays a role in all of this, and time was this factor in property where it wasn't as easy. It took a lot of time. And then the third part was just around passion. When I have my last year in CBA, I realized something was happening. Every minute that I had talked even the slightest to a friend about my property portfolio, it spread pretty quickly, and water cooler talk was rampant. Everything on water cooler wasn't the projects that we should have been talking about at CBA. Is about what did you do in property that weekend or what's happening in property.
Yeah.
And so you combine passion, you combine pain, and then you combine the world just in general moving towards a time-poor world and more expectations of us moving forward in the long term to produce quality as the machines take care of all the quantity.
Yeah.
It's changing.
And the machines will help a lot more in being able to synthesize property-based information to help deliver actionable insights. When AI will actually do the whole process when it comes to buyer's agency, I can't see that for many years. To negotiate a property for you, it's a very human-orientated thing, and finance in general. How can the buyer's agency sector leverage all that is great around technology and really drive forward for delivering value to customers? And no doubt that'll be central to your business. Has there ever been a point, Arjun, where you've gone and I would note you're talking about passion now, that water cooler conversation. For those of you who are in and around real estate probably know Tom Panos. He always says, make passion your paycheck.
Yeah.
It sounds like you've absolutely done that.
Absolutely.
You absolutely made passion your paycheck. And you got to be passionate about something to actually invest your heart and soul into it. You need to give a lot away in order to build a business. There is horrible statistics you still see where 1 in 2 businesses fail after 2 years. That's still the case, right? So the fact that you've been able to build an organisation which started as yourself into a team of many people, and then 5 years in secure an accolade like the Buyer's Agency of the Year is pretty good going, mate. But has there been a point in time where you've gone, this ain't going to work, everything's wrong, what am I going to do? How am I going to pay the bills? How do I keep the lights on? Is there any dark moments as part of this journey with InvestorKit?
There has been some. I'd be lying if there wasn't. I'd say a few dark moments that come to life has not actually been about me. It's actually been my worry for others, and to protect that anything happens to them, I take on the responsibility. And so I'll take you back to COVID. And this was a moment that still sticks with me all the time. COVID was a moment where a particular client had their property purchase in Bendigo. And the time that I had was finance they were technically approved or going to be okay with. The pest and building and everything negotiated fine. And firstly, for those wondering, Bendigo, regional Victorian city, absolute outperformer over the last few years, irrespective of the COVID boom. So super grateful for getting into there 18, 19, 20. But with Bendigo, what happened in this particular purchase was they had to back out because their business fundamentals substantially changed, as did many in COVID. And so from that perspective, their deposit was on the line. Now, I'm not talking hundreds of thousands of dollars or anything. I'm talking 20,000, which is still a big amount to many. To know that you're going to go into a business year where you could lose all your clients, you have no team showing up, your business is going upside down, and you've got to lose 20,000 on top of it and be liable for a house. That wasn't going to be happy times for that person. Now, how did I know if my business was going to be any good that year? How did I know if no one wanted to purchase any properties and everything was going to be shut down forever? I didn't. I still had many mortgages, just like many tuning into this during that same time. But what I did know is I didn't want that customer impacted. So I called the sales agent and I said, hey, I need you to help get them out of this deal. I'm going to get this deal. So we're in the middle of lockdowns here. And he just goes, mate, I appreciate your transparency, your ethics to ensure that the vendor's safe, but also your buyer's safe. My buyer is now a client for life. I've bought them 3 properties since their business has recovered. We're working on the 4th. But that red line moment for me was I was not sitting flush with cash. I was not sitting with any clarity in my business. I was sitting at a moment where I just didn't want anyone else impacted. And so to me, that was a story where I've still got that property, by the way, and I bought it for $380 and it's now worth $625, which is pretty cool. And my client is one of my best friends and I'm super close with her, and she's doing such an amazing job in her business and supports me with her business, and I support her back and multiple properties. And that agent is also now a client of ours and said, no, I want to work with you guys. And so I feel like those moments are stories of true passion coming through, but true dark moments where anything could happen, but that's how much I love this. So that's the first moment that comes to my mind. In terms of other moments, it's more so just this fear of not giving everyone the tools of success. And what I mean by that is growing a team. And you feel like you get these good people and you feel like everyone's growing, everyone's humming. But then it's now me transitioning from Arjun the doer to Arjun the leader. And I just feel like when you go through these transitions when growth is so good, you sometimes forget that you've got to let go of some areas and manage the other areas. And instead, you're having all these great team members, passionate, ready to go. And they don't get your time. They don't get your support. And they don't get any of the resources you should be giving to them as a leader because you're just so into it, you're a perfectionist and everything. So that was my next moment to learn. And it was more so dark moments in the fact that at 10 p.m., 11 p.m., 12 p.m., when you've got to catch up on all that stuff and just make sure that everyone's looked after, it's all on you mentally, and you don't have anyone to talk to because you're that business owner and business leader. And so I feel like those times reflecting on it and just going, hey, those dark moments are actually the best things for me because it made me step up to a new level as a leader. It made me step up as a new way to look after clients with that level of ethics.
And maybe dark moments isn't the right way to frame that. It's sort of those moments of challenges which are often moments of clarity. It's where you grow the most in those challenging times. And I know a lot of organisations now are going through this. Everyone's got issues with productivity. Markets are down. Everyone's struggling in many ways. But that's when you evolve. That's when you grow. That's when you create. And telling me that story, Arjun, about that situation through COVID, and again channeling your Tom Panos of the world, he would say two things about that. He would say, number one, he would say some of the best gifts come badly wrapped. So if you think about that moment in time for you, you've got a client who is challenged, who shouldn't be proceeding with the purchase. You've stepped in and said, "Look, I'll take it. Look, it's been a good investment, to be fair, but you'll take it." Tough moment, tough conversations, I imagine, tough soul searching to work out the best thing to do. But some of the best gifts come badly wrapped. You've helped that client, you've helped that person out. Now they're a client for life, you mentioned, and you have sounds like a symbiotic business relationship now. So stuff's happened out of it. The agent has recognised your ethical approach to doing business. You've captured them as a client. You've ended up with a good asset. So tough times, some of the best gifts come badly wrapped. You move on. But then also what he would say is that if there's trust in the relationship, the terms become negotiable. So you've engendered trust with that client. You've engendered trust with that agent, and now stuff just percolates and cultivates from that as well. So you do the right thing. Typically, the right thing comes back to you. It's the golden rule, and that's how most people I know who are successful in business, they just embrace that. It's called the golden rule. Do unto others as what you want to do unto yourself.
Yeah, couldn't have said it any better, Phil. I'm such a believer in what you said. I actually have a tattoo that says what you give is what you get.
Okay.
Karmic principles are deep in Indian heritage and history.
It's what my wife always says, and what we've instilled in our kids is you get what you give, right?
Yeah.
Same thing, slightly different.
Yeah, I come from, obviously, an Indian background, and karma has been one of the biggest foundational, principles for me to understand growing up from my childhood days to, don't cheat, don't lie, don't do these things. And my mother is the person who'd instilled that most in me. So those moments like that and what you just explained then are the best way to put it.
So karma for you then, is that just an innate thing? You don't think about it, you just do? Or do you use it as a check and balance to help your decision making? Is it something which is, goes without thinking, or it's something that you actually use as a tool?
I think using it so often, it's become natural in the fact that it's just in me. But then, yes, when it comes to decision-making metrics, I have my values. I have my, principles from karma. And I think of, how would I feel if that happened to me? And that's the biggest thing. And that's why, just even on the road, my wife and I talk about this, the differences between my younger brother, who's probably going to tune into this, and me. Yeah. He is a road rage machine. If someone horns at him or someone doesn't, I just can't. It's just these things have set from those karmic principles. I go, what if someone was popping off at me? Or what if they cut off in front of me, slammed the brakes hard, and then hit me? And so I'm just the calmest dude you'll see in certain situations because of those principles Mum instilled in me, and karma's the biggest thing ever in my beliefs. Yeah,
and there's something, and that I use in my decision making sometimes, because you sit there and you get stuck in the moment, and it might be hard, tough, and difficult, and all that sort of stuff. But something that I can use to check myself, which sometimes frames my decision making, is that it's easy to be kind, and it's so simple, but it gives you so much clarity. It's easy to be kind if you can find the kind way to ameliorate or to navigate any challenging or pressing situation. You find the outcome you get is a good one, and it's so simple. It's so simple, but people often get it so wrong, right? And here we are talking about property investment. This is about your business and your organisation. So, what sort of wrapping all that up? What's the vision for InvestorKit? Are you a kit? Is it a kit of stuff, or where's this business going, mate?
Yeah, look, we've evolved into that kit now. If someone were to just jump on the website and they go, hey, investorkit.com.au, and they look at that and say, what do we see? Well, we see research papers at a quantity, quality, and featured across Australia's news and media more than anyone else has in the country. And that's not just because we're out there. It's because there's insights there that we want to deliver. And this is coming back to that point of technology. How many buyers agents can sit there and look at their customer now and go, these are the top 4 areas of South Australia, before you became a customer?
Where are they?
Yeah, there's Onkaparinga, there's Tea Tree Gully, there's all these areas, right? And council regions.
Yeah.
And how many people can look at the top 5 regions of Queensland under 500K and say, this is where they are? Rockhampton, these sorts of areas, Toowoomba, and they did that. They performed. And so the biggest thing I've come to learn is that givers gain, right? And so that is where InvestorKit's going. We're going to give more than anyone else can give. Because one thing that we've come to realize is that to build the most successful, whether you look at it from impact, profitability, financials, anything you want to look at it, cut it in any way, buyer's agency in Australia only needs to look after 0.33% of all investor transactions in the country. There's enough customers there.
Yeah,
there's enough deals. There's enough property. There's enough good property.
Yeah. See, you know what? But to that point, Arjun, and I asked you around why did you choose to build a business around buyer's agency, right? The more I look into it, and we've been a huge supporter of the buyer's agency sector for a decade, right? For a decade. And I like to think that in many ways, a lot of Australians are probably better off as property investors because they've chosen to use a professional as part of a real estate transaction. And if we score well in that regards, I think we've done our job pretty well, right? We've democratized the idea around leveraging and using professionals to support investing in property. It's a good thing to do. But for buyers agents and buyers agencies, I think you're just getting started. I think you're absolutely just getting started as an industry sector. There is so far for this to go as more and more Australians realise the value of investing in property, whether it's owner-occupied or for the purpose of property investment. And understanding that, like most things in life, you turn to professionals to get a better outcome. So why wouldn't it be like that in property investment? Now, I think most Australians think because of the psychology of property in Australia that everyone can give it a crack, which is great. I think it's brilliant. The Australian psyche of give it a go, right? But you want to give it a go with the best team behind you, and you need to have the right account. You need to have the right buyer's agency. You need to have the right financial planner. You need to have the right conveyancer. You need to have the right pest and building person. You need to have the right mortgage broker.
Yeah.
Use a mortgage broker. Don't use a bank. You get more choice. It's simple, right? Just messages like that really help people grow it out. So I think you've made the right decision moving into this buyer's agent sector. What I would say is it's still a nascent time for this industry. What's it going to look like in 50 years' time? Yeah. There's 60-odd thousand real estate agents in Australia right now. You look to America, there's normally advocates on both sides of the transaction. There's a selling agent and there's a buying agent. Now, structurally, they do it differently. They share the commission, right? Different here. You pay a fee for a service to use a good buyer's agent. If you're not paying for a buyer's agent, they're making the money elsewhere. It's probably on some sort of development deal, so they're probably not a buyer's agent. So the construct is right. I think the industry will grow rapidly. So how will you set your business apart? Not to talk business speak, but what are your points of differentiation? What are your unique selling points? We've spoken about data being data driven, and you've got a pretty good jump in that regards. But how are you going to continue to position yourself in the future to be competitive and continue to grow?
Yeah, I might start at those industry data points that I mentioned because those things are very important. So when I mentioned that 0.33%, how that has absolute relevance is that if you have 500,000 transactions in Australia a year, and then you say for our business supporting investors, that's 35% on average are investors.
Yep.
That's 175,000. Now, if you're purchasing 600 properties a year as a business, which we aren't yet, and we'd love to aspire towards, you're looking after 0.33% of the investment transactions in the country. So why that's so important to mention is that when you know that, you should have one of our core values, which is diligence, at core in your heart. And when you have that from a business principle, that allows me to go, well, imagine a business in an industry where there's no shortage of people who would like help, who want help. They just need to understand the value better, be familiar with the industry over time, and we have the responsibility as a business to show them these successes of our clients. That'll take time, they'll happen.
Yeah.
So when you know that, I'm now all chips in on building a team that's so special, that has such an extra level of extraness. When I say that in terms of process, service, research, reports, due diligence, something that just goes beyond what any one person can deliver isolated who wants to run a smaller industry buyer's agency, then that is the best thing for the customer. And me knowing these statistics make me realize that there is no shortage of them. And so in summary, when I bring it out to what my business is planning to do and wants to head towards is it's commoditizing that research to make it so available so people know where the best interpretation of that research is. We've already got a team of data scientists, research analysts, myself, head of research, and junior research analysts, that we are now also taking AI to new levels with implementation. We don't want people to ever fear who's going to be better or worse in interpretation of the data. We want a clear choice to be made.
Yeah. And
then as we take that one next step, it's not about, hey, as you get a large company, this is where churn and burn exists. It doesn't. If we're only at one of the largest companies in the country, to get to that level, you only have to do 0.33% of transactions, you can say no to a lot more deals than you have to say yes.
Yeah.
So there's no churn and burn here. There's how do I now hire at a 5-to-1 ratio, which is something I've been doing, which is at any one given time, my CBA experience, made me realize what's the pinnacle of CBA? Private bank. And at private bank, they always talked about the 5-to-1, the wealth advisor, the associate, the lender, the insurance, the manager, and so forth. Why can't we build that level of service to private bank advisory level for the common mum and dad who gets unbeatable unbelievable protection in data and efficiency of that data, the results that come from it, to then have 5-to-1 ratios of people on the ground, people building your portfolio plan, people interpreting research, people doing comparable sales and valuations. So we have the absolute world of specialists. Whereas right now, the other side, and by other side I mean the smaller single wise agency or the real estate agency, is all driven about one person being your guru for everything. And that is not fair for customers, because I can only be good at one thing to mastery level, and you can try anything. Try be a swimmer that's the best basketball player, that's also the best tennis player in the world. It just doesn't happen. Lebron James hoops. He doesn't fight in the cage. He doesn't do anything else. He hoops. And so I need to create a team of specialists that are the best in field, and that's what we're on a mission of doing. So when customers come in and say, hey, how do I find my next property or build a scalable portfolio, you've got a team of specialists who can come in and absolutely take things to new heights.
So what are you mastery at then? Is it data research?
That's my baby.
Yeah.
That is my baby. I think when it comes to data and research, whether it's my phone, whether it's my laptop, whether it's a team meeting, you won't see my laptop or phone open without a spreadsheet somewhere or a dashboard or some modeling. And so that's also my most passionate thing, because I love proving things wrong and I love showing how if we say this, this goes right. And it takes me back to when, this time last year, we were on TV on the Week in Today show, and there were 3 calls we made. Get ready for rents to explode. They're going to keep on exploding. And here's 20 regions where they should keep on exploding. Second thing is Adelaide will again, this calendar year, be the best performing capital city and grow double digits. And third, Sydney will continue to decline, probably in the vicinity of 6 to 9%. The rents call, correct. Adelaide call, correct. And its percentages, correct. And Sydney continue to decline. Now, we aren't here to go brag about being right, but we're here to go, we found something that's repeatable, a formula that actually is not crazy calls being made, sensible calls being made, being using data that we can clearly explain. Now it's just about doing that at scale to all the mum and dads to create some special results.
So 0.33% is the market share you're aiming for. That's an immediate goal, and no doubt as you build your business that will change over time, right? But I can't remember the numbers yet. Was that how many property transactions in Australia every year? 500,000.
500,000 on average between the good and bad.
And a third of property investors, right?
Third, so that's a 175 sort of.
175. So you need 0.33% of the market in order to support clients secure 600 properties, and that's pretty good going. That's pretty much 2 a day.
Yeah.
Which is keeping your team busy, no doubt. And that'll change, right? You think about, I'm sure you've got that goal written somewhere. It will change as you keep going down this pathway. But it's nice to have a focus, nice to have something to work towards. The thing with buyer's agents, my view is that even the market as it is right now, I don't know what percentage. So you said 175,000 properties are transacted for the purpose of property investment, right?
Correct.
I don't know what percentage buyer's agents do already. It's pretty much impossible to find out. Less than 5?
Oh, so small. So we as you know, here talking today, how we took out Buyer's Agency of the Year. Now, there are a few other businesses in the vicinity that do some pretty serious numbers too.
Yeah.
But with the volume of families that we help, we're in the top 10 in terms of size. So if you take the top 10 and then you take the law of averages across the other 1 to 2,000 buyers agents, it's one of the smallest percentages out.
Yeah.
And so I think as a result, like you said, there's a long way for our industry to go. But coming back to the core value we had, which is diligence, it shows that as you grow, there is never a need to cut a corner.
Yeah.
As you grow, there's never a person that you should say, we can do this if you can't. And that's the beauty of this industry. And I feel like if customers are walking into that environment, they can sense that from the person in front of them.
Yeah.
Then they're going to be in good hands, especially in the growth phase of an industry.
And I think also the good news, if you look at the numbers and you look at that, through the lens of what you've just outlined, Arjun, is that the good news for Australian consumers, as in those that choose to use the buyer's agency, right? The percentage of deals, the percentage of investment stock bought and sold, buyer's agents are only but at the moment a fraction of assisting clients do that. So on that basis, you would assume that you're getting a good service, simply because they're not involved in too many transactions. It means that they should be picking the eyes out of the 175 properties, that 775,000 transactions that do happen for the purpose of property investment. Now, you would assume that, right? And you shouldn't, as a business or as an industry sector, compromise on the quality of the value you create your clients. And you see it all the time. I speak to a lot of buyers agencies, and whether or not you see this in your business, is that you have more clients than what you do have good properties for them. And that happens, right? And that must be something quite challenging for you as a business, where you go on, I could help more people buy properties, but I'm just not convinced that these are the right ones for them. So there's typically this pool of people who are waiting for the right investment. They're ready to go, but you aren't able to find something that's ideal for them. How do you sort of balance that? Because you can find everyone a property today. It might not necessarily be a good one.
Yeah, there was 3 components that we realized that we needed to do to balance that. Number 1 was, because of these percentages, there's actually a lot of stock out there.
Yeah.
And so when you know that, it's about then transitioning to number 2, which is you have to be a hunter. Your customers are stopping the hunting, so you can hunt for them. And I realize that right now, the way the industry is set up is that everyone's trying to be the hunter, the salesperson, the presenter, the due diligence person, the research person, and that's dangerous for customers, because then you can constantly say, oh, we haven't found the right one. Well, our acquisition team, we've got 5 people now making 100 phone calls a day combined. Then you times that by 5, that's 500 phone calls to agents for off markets. Doesn't include the text messages.
That's just hassling agents to try and get stuff that hasn't hit the. So you call off market properties stuff that hasn't hit platforms yet, or off market properties are people who haven't really even thought about selling their property?
Multiple. Off market, pre market, post market. That's our different definitions we use.
So what do you use? Off market?
Off market is basically, hey, isn't in any database blast out to anyone. Could be agent, non-agent, is what it is. But the main thing is it's not gone to anyone else but you. Pre-market is basically it's there and it's going to go live, but maybe they might blast it to their inbox and database for multiple buyers agents to go against. And then you've got your post-market where it went online, very, very stubborn vendor. They don't want to change it, goes off, and then now they get some sense into them, but you now compete in a world where it's not on domain and real estate and you buy it post-market.
And what do you prefer?
I prefer a combination of the off-market and on-markets. And the reason why is with the off-markets, we eliminate the competition mostly, and we have our fair pricing models, and if it's not going to fit it, see you later. And on the fair ones on-market, this is where it gets interesting. The data in down-to-the-moment real estate doesn't come from the spreadsheets. It comes from how many people at the open, how many offers, how many times you missed out. And just to give me that sense of confidence. Because, hey, I can't rely on the spreadsheets to make every bit of confidence. My moment of confidence is when I have my on-the-ground team visit an open home, see 40 shoes outside. That's cool. So I love seeing that. Then the next thing is we start seeing 12 offers in. We start seeing a go above asking, and then we also start seeing a customer go, I only want to put in 600 because that's what the range says, and then all of a sudden it goes for 700. Do you know why I like that? Because that proves to us, hey, I'm glad you didn't do this on your own, because you would have missed out for the next 6 months doing what you just did, putting 600 just because the agent said it's 600. We're not here to worry about what the agent says. We're here to get comparable pricing right. We had to analyze the sweet spot as professionals between don't overpay and don't sit on your couch missing out for 6 months saying the world's a horrible place and everything's too expensive and things are going too fast. You want to make and grow your wealth, we need to find the sweet spot.
And, that's not a bad construct for thinking about sort of off-market, pre-market, post-market. And a lot of buyers agencies will set their stall out, and where they do act and operate really well, it's just off-market stuff. This is finding assets for investors before they've even really contemplated doing something about it. But the on-market stuff or post-market stuff, when it is on realestate.com or domain.com, this is when a buyer's agent can have a view of something which is very different to everyone else, where they can actually see a value in what might be a property which most people would look at and say, I don't want to touch it with a barge pole. And this is properties that might have a lot of cosmetic issues, might have some structural problems, it might have termites, it might have all the stuff that would normally turn off your typical do-it-yourself mum and dad buyer. Buyer's agents obviously a lot of value in that. And I've acquired properties like that. I'm selling one right now that we bought for $232,000, Arjun. We'll probably sell it 10 years later for about $830,000, right? Because it was a horrible property that the bank didn't want to fund because, it would have been okay if you were a crack addict that lived there, but wasn't really habitable, right? So it was through using a buyer's agent I was able to realise that value and offer. That's a way that can help you out. So Arjun, tell me what's the business going to look like in 5 years' time?
It's going to look like a business where the majority of clients own 3 or more investment properties, achieving the goals that they want to, and being in the top percenters of investors. And by top percenters, not from an ego perspective, not from I got 6 properties but they're all worth 100K perspective, and not from I got a big portfolio dollar value perspective, but being the top investors from that perspective where they look at their goals and say, I'm on track and I don't have to stress or think about this thing that was bugging me, which is income, post-job, retirement, wealth, generational wealth. And I did it whilst having my weekends back, not overpaying, not making expensive mistakes, and not falling to the traps of the barbecue uncle and auntie with all their advice. And so I think that's where we are today, but imagine that at scale. And with that 5-to-1 model of 5 key specialists to ensure that one person gets an absolute dream of a service, whether they're the 20th person that came on that month or the first, and with enough people in a team that allows us to really knock on all the doors we need to be the hunter that client expects us to be so they get their time back. That's where it is, at scale, at service, and with the karma principles that I carry with me every day, no one else will feel like they bought a dud.
Well, there you go. Arjun Paliwal, InvestorKit. You mentioned you had a whole bunch of stuff available online. How do people track that down, mate?
Hey, all our research is out there, investorkit.com.au, and you'll see the research tab, which has research papers. We have our news and insights, our blog section, and we have Property Nerds, the podcast there as well, which is also featured on the Smart Property Investment Show, and a bit of all of that there ready for people. And if you'd like to have a free consultation, we've got people ready to go to have that initial chat.
Okay. Do people get the chat to you at some point as well?
Yeah, well, I've made my business structured in a way where I realized, hey, people are here because they've seen what's possible in property investing, and I was the person in our business to start that. So I need to be there. And whether it's in the facet of, hey, I need to speak to someone on the research, well, you can speak to the head of research. Hey, I need to speak to someone about strategy. Well, I'm here as the founder of the business, ready to support my portfolio strategists and our buyers agents to ensure that if they need me to speak to someone, I'm always there. And it's without the team, I wouldn't have been able to do that. If I was here doing it as a one person, I would have capped clients, I would have capped this, I would have said, speak to that person. Well, if anyone truly wants to, when they are a client of ours, that's the moment in which I can offer that time.
Okay, well, thanks for coming in, mate. I really enjoyed learning more about InvestorKit. Congratulations again on the Buyers Agency of the Year. Have you got that bit of crystalware sitting somewhere nice in an office?
Oh, mate, it's not the crystal, it's the impact. I think the crystal's getting some dust somewhere in the office, but it's definitely the impact here. And I think the most important piece from that award wasn't winning it from a satisfaction to say, oh, we're the best of this. It was a sense of belief to go, we're on the right path here. From the model for our customer, to the research we put out, to the podcasts we share and create, to the actual properties we buy, to the people looking back 3, 5, 6, 7 years later and going, my goals are on track. That was the special moment that said, guys, we all did this as a team. Let's do more of it.
Do more of it. That sounds like a good idea. InvestorKit, go and check them out at investorkit.com.au.
That's it.
Imagine.
Thank you so much.
It's on the scene. Arjun Paliwal. Thanks for tuning in, everyone. I hope you enjoyed that story. Sort of uncovering what makes Arjun and his business tick. Some really good insights there, and I've learned a lot. So I really enjoy having those conversations, and more to come as well. Arjun will come back. No doubt. It's not his first time on the podcast, so it certainly won't be his last time. Remember to check out smartpropertyinvestment.com.au. If you haven't yet downloaded it, the Fast 50 report, of which Arjun was a participant in, gave us his insights as part of that report, that ranking. You can go and download it. Just again, smartpropertyinvestment.com.au. Social media, you can find us, Smart Property HQ. And please keep those reviews coming. We get a real kick out of reading them, and it does certainly help us shape this podcast as we move forward. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.